Hey everyone, Brayden here, coming to you with a breaking Disney news update. This is a big one, you guys, or at least it seems that way. Yesterday, while we were having lots of fun with the Magic Kingdom wildlife saga, Disney CEO Bob Iger and Parks Chairman Josh D'Amaro were on location at Walt Disney World hosting an investor summit with Wall Street analysts, unveiling their future plans for the park segment of the Walt Disney Company. It turns out very similar to the presentation we received as fans at the D23 event the other week, where it was all, we're thinking about doing this, we might do that. In regards to all the future projects, Wall Street got a very similar sort of financial presentation with the same sort of, well, we're developing plans to spend money and we might do this or we might do that. But putting aside for a second the fact that this announcement here, it's the announcement of Disney developing a plan, just like what we saw with the Animal Kingdom stuff, the Magic Kingdom expansion stuff. All of this is hypothetical. Putting that aside though, the newsworthy info at this hour is that Disney is developing a plan to spend $60 billion in capital expenditure on the park segment over the next 10 years. Now, mind you, this isn't $60 billion for Walt Disney World alone. This CapEx money also includes money for all the other aspects of the DPEP segment, as it is called. It includes money for more cruise ships, for more expansions of the parks overseas, more money for consumer products, investing in that division, which is also part of the park segment currently. But in this plan that Disney's developing, there is lots of money that would be theoretically allocated to cover land expansions at Walt Disney World, as well as, I assume, the big Disneyland Resort expansion that Disney has been talking about for years. Along with this announcement that Disney is thinking about spending $60 billion at the parks over the next 10 years, we also got this slide deck that Iger and D'Amaro presented to Wall Street, which mostly comprises of highlighting the growth and stability in the park segment of the company. Most notably in this presentation is a slide demonstrating where in the past 10 years where Disney massively upped their capex at the domestic parks, while their capital expenditure in that period increased threefold the amount of money they were spending and investing on the parks, their operating income, the money that they were getting out of the parks once all the bills are paid, increased fourfold. So this shows what all of us, what every fan already knows to be true, and that is that Disney investing in the parks is a slam dunk way to increase attendance and demand and costs and hype and everything else that results in Disney generating more money. So it's not only good for the fans that want new stuff, it also actually makes Disney more money as well, which is funny because the folks that are presenting this chart arguing our points, showing how CapEx is great for the parks, are the same people that have presided over this period where the parks capital expenditure has been slashed significantly from 2019 levels. That was not all Chapek. That started under Iger, and Iger continued to be chairman during much of Chapek's tenure and was checking off on all of this, even making some of these decisions himself. Parks chairman Josh D'Amaro was in charge of the parks the entire time that we have seen capital expenditure go down the drain, especially at the domestic parks at Walt Disney World and Disneyland. You know, we complain about a lot of the lack of spending at Walt Disney World. It's also bad at Disneyland. I've gone to Disneyland twice now over several years, and both times over by Tomorrowland, they had those walls up. Disneyland folks know what I'm talking about. Basically, Disney announced that they were going to put in these new planters at the front of the Tomorrowland, and these are going to be, you know, the first parts of this big eventual update to Tomorrowland, but Disney never even got that done. We see similar laziness at Walt Disney World, where over at Hollywood Boulevard and Hollywood Studios, part of one of the facades fell apart last year due to lack of proper maintenance, and Disney walled it off, and they were supposed to put in new marble, new stonework, and they never did. They actually seem to have just totally given up on it. Now they've just put up permanent go away green painted plywood. That is the actual name of the color at Imagineering. So we see how the lack of capital expenditure at the parks, it's so little that even these tiny little updates aren't happening. Disney isn't even maintaining what they already have, let alone expanding. So it's interesting to see in this presentation, these executives presenting our arguments on how investing in the parks, it's easy money, it's totally worthwhile, it actually ends up making Disney money, while at the same time as we speak, these same executives are being the biggest budget sticklers in the world and greenlighting so little of note that at the parks panel we just had, they mostly announced ideas instead of actual funded projects because nothing is getting funded at this time. Also in this slide deck, there's the highlighting of how many intellectual properties that the executives have inserted into the park and how that's the strategy for these parks investments, putting in more movie IPs. Both Iger and DeMauro are strong believers that it's the name recognition of Disney's IPs that drives people to the parks, which lots of fans, including myself, would disagree with, partially because some of the best attractions at the parks are not based on pre-existing Hollywood films, yet are extremely popular and keep people coming back to the park. It's that unique stuff that really makes Disney so special and really puts them above the competition, where Universal, they're doing all intellectual property stuff. It's nice that Disney has some special stuff that the Imagineers just came up with from their own imagination that isn't dependent on some pre-existing movie franchise. There's also a slide that shows how over the Chapek tenure, per capita guest spending went up significantly at the domestic parks. Note, this isn't showing how Disney made more money at the parks over that period. It's showing how they made more money per guest. But Disney brought in fewer guests. So was the nickel and diming of your loyal customers with Genie Plus and Lightning Lane, was that ultimately worthwhile? Was it actually profitable? That's the issue with a lot of this data that they present, where they're comparing stuff to specific years and they really just want to get it to look a certain way on the chart. You guys know what I'm saying, where they pick and choose certain stats that show what they want to show. But if they're tailoring this data to say to Wall Street, hey, CapEx at the parks works and we want to do much more of it, I say more power to Disney. Keep showing these stats if it means that the likes of BlackRock and Vanguard and JP Morgan let the Disney executives actually go forward with something like this, because it would be huge for the parks and us fans who love following the development of all this stuff if these big institutions, which control everything, will allow the executives to put money towards new lands at the parks. It's amazing how much room Disney has to grow at their parks. Disney even mentions in this press release, quote, Disney Parks has over 1,000 acres of land for possible future development to expand theme park space across its existing sites, the equivalent of about 7 new Disneyland parks. Lastly, on this announcement of Disney looking to spend $60 billion on the park segment over the next 10 years, DeMauro did an interview with the New York Times as part of this announcement, where he threw out yet another blue sky idea, another one that we can add to the pile with all the other Josh DeMauro blue sky ideas that he's given us over the past few years. He says, quote, imagine bringing Wakanda to life. In terms of bringing the latest Disney, Marvel, Pixar intellectual properties to the parks, we haven't come close to scratching the surface. And we have learned that incorporating Disney IP increases the return on investment significantly. So there's a new one for you, perhaps Wakanda coming to one or perhaps even multiple of the Disney parks around the world, the Disney resorts around the world, as part of this next round of investment. Now the question really is this next big round of investment actually something that's real, or is this all just fluff that the executives are throwing out there to appease the fans because Disney has some layoff announcements coming? That's the rumor right now. So maybe this is some fluff that they're throwing out there. Who really knows the true motive behind this sudden random PR campaign that the executives are going on? I'm going to be optimistic and take them at their word that they are really looking to do what they're saying that they want to do, because saying that you're going to spend way more money on the already profitable parks isn't exactly a winning message for Wall Street. So it did take some stones for Iger and DeMauro to actually put this out. This announcement hit the already suffering stock pretty hard. Off the announcement, the stock went down some more because it's Disney saying, hey, we're going to, spend all this money. We're going to borrow more money to invest in these parks, which are already doing well. On the earnings, a lot of investors see that and say, oh, this stock isn't going to go up for a long time, and they head out the door. So hopefully the executives will stick with what they are saying here and start actually approving, start greenlighting all these Imagineering projects that we've been hearing about for years and years and years. I just don't know where the funds are actually going to come from when the interest rates at the bank continue to go up and banks are tightening on lending. And at the same time, all of Disney's cash on hand, a lot of that is earmarked for maintaining liquidity or paying off Comcast for Hulu, or paying off the mountain of debt that they're already in due to the prior Fox acquisition, as well as the Disney Plus situation. That service is continuing to generate major losses for the company, despite the executives promising in the future it's going to become profitable. So who knows why exactly the executives even did this presentation, how serious they are about what they're saying here, but hopefully they are serious about what they're saying here, and we are about to enter a new decade of expansion at the parks. That would be pretty awesome, but definitely manage expectations there, because we've been the victim of many false promises from these guys as of late. Let me know what you guys think. Last up in the news today, we have a new video shared by Wesh2 News of the Magic Kingdom bear from yesterday being released into the Ocala National Forest. You guys have got to see this.
Good bear, go, go, go.
That bear went on quite the adventure the past few days, didn't she? If you enjoyed this video, be sure to subscribe with those notifications on. Thank you all so much for watching. From the Mickey Views Magic Studio, this is Brayden. Have a magical day.